kind of a sad day now that we know that the inverse Cramer ETF is shutting down. Also, there's another once popular DeFi platform shutting down for surprising reasons, and a lot of money is moving into the Coinbase institutional wallets. I got an insight onto all of this information. If you guys enjoy these daily updates, I appreciate it. If you hit the like button and hit subscribe, because we put out videos every day in an effort to keep you up to date on what the heck is going on in this cryptocurrency space. So first off, let's talk about what's happening with the inverse Cramer tracker ETF is shutting down with a loss of 15%. This one was launched in 2022 by Tuttle Capital Management. In fact, they filed two ETFs. One was to long Cramer's predictions and one was to short his predictions, or rather the inverse of his predictions. In fact, here's a quote. "The fund is an actively managed exchange-traded fund that seeks to achieve its investment objective by engaging in transactions designed to perform the opposite of the return of investments recommended by television personality Jim Cramer." They say it's sad to see this one go. To be honest, I really think this idea had potential given his knack of spectacularly wrong calls. The problem, in my opinion, wasn't idea, but design. It was a long, short strategy, so it could never really get a shiny object moment. So it's not that betting against whatever Jim Cramer says on TV is a bad idea. It's that this particular ETF couldn't get enough attention to really garner a lot more profit. Sad to see that one go, but the idea, I think, is still solid. I think many of you in the comments will agree with me as well. Yield Protocol is a DeFi lending platform that's also shutting down. This one was once known for their fixed lending rate. This team is referencing reasons for their shutdown is due to basically not enough demand from borrowers and also regulatory compliance uncertainties. And that last one, it has to make you think, if regulatory compliance was a concern of theirs and a concern enough to make them actually shut down, can they really be considered DeFi? Decentralized finance. If we're looking at the regulations according to Europe, if a decentralized lending or decentralized exchange, what have you, is decentralized enough, it falls outside of their regulatory scope. Not necessarily because they're going to choose not to regulate it, it's because they cannot regulate it. And that is something that we should always be looking out for. So keep an eye out for this. Maybe this is going to be a trend in the future as regulators are maybe becoming a little bit more educated in this cryptocurrency space. They can find the bottlenecks in these supposed decentralized DeFi platforms and decentralized exchanges. And much like what we saw with other decentralized exchanges years ago in like 2017, what was that one decentralized exchange that shut down? The name is escaping me at this point, but I think it was like 2017 and maybe it was running on the BitShares platform. But it was a decentralized exchange claiming to be decentralized, and yet they were requiring KYC. And that was one red flag for, signifying that they are centralized in major ways. And this is the same for Yield Protocol. And we're probably going to see this from many more DeFi platforms as well. They're going to be citing that they have to shut down because they can't manage the regulatory risk. And that's because they are centralized and regulators have identified their bottlenecks. But now let's move on to what's happening with Coinbase institutional wallets. I did a video on this last week talking about how the Blackrock ETF wallet has assumed to have been identified, and it's pretty obvious that that is their current ETF wallet. What the balance of Bitcoin that's been accrued within that wallet matches up with what they're announcing that they're buying. And now we're seeing more transfers, large transfers of Bitcoin, but they're saying that there's 13 transactions withdrawing a whopping 19,161 Bitcoin from Coinbase Institutional. These Bitcoin transfers varying from 1,200 to 1,479 Bitcoins each have been directed to anonymous wallets. Well, methinks these are being transferred into wallets of other ETF, Bitcoin spot ETF issuers. Maybe it's Fidelity, maybe it's VanEck, maybe it's one of the 9 other Bitcoin ETF offers out there. In fact, now we're seeing that the 9 new Bitcoin ETFs are buying on average 12,700 Bitcoin every day. So that definitely lines up with the amount of Bitcoin being withdrawn from this Coinbase institutional wallet onto their own anonymous wallets. I think it's going to be very soon where we're all going to be identifying very easily which wallet is associated with which Bitcoin spot ETF issuer. Also, keep in mind, for those of you who are doubting the scarcity of Bitcoin and the impact of institutional investors now in the Bitcoin game, only 783 new Bitcoin were issued yesterday, where again, these 9 other Bitcoin spot ETF issuers are buying up to 12,700 Bitcoin in one day. So the miners are, they're going to have basically zero impact on the market in terms of dumping their Bitcoin on the market because they're just getting gobbled up by these institutional investors. In fact, for those of you who might have missed it, over the summer, Blackrock issued a surprising report regarding their recommendations on how you should allocate your wealth in terms of passive income. They're saying that 84.9% of Bitcoin allocation for portfolio returns. And here's a little bit more specific there. From Thomas Young on Twitter, he says, I sense that this paper by Blackrock not fully appreciated by market participants. The classic 60-40 equity bond portfolio that has come to define passive investing strategies is optimized further with the following allocation. Bitcoin, 84.5%, equity, 9.3%, and bonds, 6.2%. This is so radical as to be unbelievable to most people. Let's assume that BlackRock actually believes this and starts early adopters into this allocation direction. I mean, are you really considered an early adopter if you're taking the advice from BlackRock a decade after Bitcoin has been announced and after 2 very public bull markets of Bitcoin have been, basically live streamed over mainstream media? I think the term early adopter applied now is a little bit late. Again, that's just my opinion. Again, he says over the course of the next few years, we will see massive move of managed money in this direction. Early bird gets the worm. Sure, anyone who's been dollar cost averaging the past decade is golden, in my opinion. This is not investment advice. Again, this is just my humble opinion. My name is Heidi. This is Crypto Tips. If you guys enjoy these updates, if you don't know how we are allocating our own cryptocurrency portfolio, there's no better place to check that out than learningcrypto.com, home of the CT Club. I'll see you later.